Common mistakes investors make while starting a company in Bahrain. Bahrain is often marked as a low-tax, business-friendly jurisdiction. But in practice, most investors' problems in Bahrain come from poor planning and regulations. Let's break down the key mistakes and what smart investors do differently. Choosing the wrong jurisdiction and business activity. One of the most common mistakes is selecting a license without understanding Bahrain's regulatory framework. Investors often choose the wrong commercial activity, combine regulated and non-regulated businesses, ignore future banking and expansion needs. And what's the best practice? Always align your license, jurisdiction and activity with your real business model and growth strategy. Weak corporate structure planning. Many investors rush into incorporation without proper corporate structuring. Typical mistakes include unclear shareholder and director roles, no holding and present company structure, poor ownership planning. This creates problems during banking, audits, funding and exits. Best practice. Structure your company for long-term scalability and compliance, not just approval. Underestimating AML compliance requirements. AML compliance is a critical area where many investors fail. Banks in Bahrain require clear source of funds, transparent shareholder background, defined transaction flow, proper KYC documentation. Weak AML preparation often results in bank account delays or rejections. Best practice. Prepare AML and compliance documentation before applying for banking. Banking assumptions and delays. A common misconception is that company registration guarantees a bank account. Common errors include no operational substance, no contracts or invoices, mismatch between license activity and transaction flow. Best practice: plan banking in parallel with incorporation, aligned with compliance expectations. Keeping share capital too low. Many investors keep very minimal share capital just to reduce initial cost, and this affects banking confidence, regulatory perception, activity credibility. And what is the best practice? Maintain reasonable and justifiable share capital that reflects your business scale. Misunderstanding VAT in Bahrain, which is 10%. Another major mistake is assuming Bahrain is completely tax-free. Bahrain has VAT at 10%. And common VAT mistakes which people do: late or no VAT registration, incorrect invoicing, ignoring VAT filings and compliance. And what are the best practice? Understand your VAT obligation early and stay compliant to avoid penalties. Withholding tax and DTAA misinterpretation. Bahrain offers a strong advantage: no withholding tax on dividends, interest or royalties. However, foreign income may still be taxed in the source country. DTAA treaties are often underutilized. Best practice: structure your Bahrain entity to legally benefit from DTAA treaties. And what is the final takeaway and good practices? Choose the right jurisdiction and activity. Build a strong corporate structure. Ensure proper AML compliance. Plan banking early. Maintain realistic share capital. Comply with 10% VAT and use Bahrain's zero withholding tax wisely. Bahrain is not just easy, it is strategic. When structured correctly, it offers stability, credibility and long-term growth in the GCC. If you have any more queries for Bahrain company formation, you can drop an email. Thank you.